Pure Multifamily REIT has received final approval to graduate to the TSX from the Venture Exchange. This is a U.S. apartment company that has been pursued in the last year by a potential bidder. The stock remains a top pick for our next guest. Vision Capital's Jeff Olin. He's CEO and portfolio manager at Vision. Thanks for being here.
Thanks for having me.
And of course, top pick because you already own a lot of this stuff. Obviously, walk me through your model, because you actually do own a lot of things that do wind up in play or have seen M&A activity. Is that part of the plan?
Well, our strategy involves buying real estate cheaper in the stock market than you can in the property market. So we look at the underlying net asset value of the real estate and then compare it to the stock price. And that's one thing you can do in the stock market you can't do in the property market. And we like fundamentals of apartments. We like the fundamentals of industrial. So we look at supply and demand driving the fundamentals, and then we look at valuation.
And why do you find that imperfect pricing? Why would it be cheaper in the stock market than it warrants?
That's a whole 1 hour. But you know, in Canada, it's driven by the fact that 80% of REITs are owned by institutional investors, retail investors, whereas in the United States, it's institutional investors, so they buy yield because yield sells. In the United States, if you're not part of an index, so we have the Howard Hughes Corporation, a corporation, not a REIT, no dividend, $5 billion market cap company, ignored. Generates no corporate finance fees is another factor. If you don't generate corporate finance fees, you often don't get analyst coverage. But there's a number of reasons that there's inefficiencies that give that result. And
is it your expectation when you find them at valuations that you think will improve over time? Is the M&A piece of it also in the mix? Is there going to be more consolidation? Is that an appeal?
Yeah, absolutely. We've had 16 takeovers in our portfolio in the last 10 years. Because what's different about real estate, if you're in biotech or healthcare or technology, the public companies are your largest comparison set. In our space, the private market dwarfs the public market. So unless there's an impediment to surfacing value, there's an arbitrage between public and private markets that's very relevant in the real estate world that's not as relevant in other asset classes.
Do you expect to see more of that private market become available to you? Or are we going to see more REITs
Yes,
listing?
there's a tremendous demand globally from institutional, high net worth families for real estate. You have a low interest rate environment, you have an aging population, you have a lot of global strife and turmoil everywhere on the planet, and so much private capital looking for properties. But in the public market, valuations got out of whack. So we've never seen a period of time where you didn't, through my experience and my partner, we've been doing this 35, 40 years, where you weren't able to buy real estate cheaper in the stock market than the property market.
I want you to hold your track record up against expectations for this kind of asset class, because there's a sense that there's a cyclicality here, that there's an interest rate cycle that comes into play, equities, rise and fall. How does your track record manage to stand up against that?
Well, we're not bulls for real estate. That's not what we do. We're a long-short fund. We can be short. Some of our 2013, 2015, 2018 were negative yield, negative returns for REITs or the broad market. We've been positive every year for 10 years because when you're buying real estate at 60, 70, 80 cents on the dollar in the stock market, even if value is correct, now it's 70, 80, 90 cents. There's a cushion on the buy side, and we can be short. We were short Alberta real estate. If you own office buildings in Alberta, it's going to be 10 years before you recover your capital. We went short in 10 days. If you own a shopping mall in suburban Pennsylvania, you lose your Sears, turn out the lights. We've been short retail for 3 years. So that's some of the metrics. There's a long short fund and value driven. We can help, lessen those cyclicality impacts.
You also, Pure, for instance, is a U.S.-focused apartments, and it's a residential REIT. What is your breakdown geographically? What do you like?
We like industrial and we like apartments today. All the pain in retail is benefiting industrial real estate. For every $1 billion in e-commerce sales, you need another 1.5 million square feet of industrial real estate, logistics, e-commerce. 30% of every online sale is returned. Where is it returned? To the warehouse. So reverse logistics is a buzzword that's evolved. We like industrial, we like apartments. There's powerful demographic and seculars, aging population, millennials wanting to live in apartments, getting married later, having children later. This all bodes well for the powerful demographic and secular factors in apartments and industrial. Those are the two favorite asset classes we like today.
Where are you on retail?
We're short retail.
Of all types?
Yeah, I mean, we like the mall space better. You know, you saw M&A, you saw Brookfield last year buy GGP, S&P 500 company.
Yep.
Perfect example of what we've been talking about. Brookfield, they have operate in Canada, United States, so they have IFRS accounting. They held the value of their shares in GGP at $29.50 on Brookfield's book. They paid $23.50 to buy 100 of the top malls in the United States.
So that is that disconnect that's out there that you will continue to capitalize on?
Exactly.
Is it crowded? Are you facing a lot of competition that are also hunting that same gap?
Again, there's thousands of mutual funds and lots of property funds, but long, short, active investing, no, not so much. And frankly, one of the reasons we've been as successful as we have been is there's just less competition in our field.
It's good to check in. Hope to talk to you soon.
Nice to see you.
Jeff Olin, President and CEO of Vision Capital.